One of my go-to weeknight dinners that always delivers is roast chicken and potatoes. Here's how I make it. For the marinade, combine roasted red pepper and tomato paste, minced garlic, olive oil, lemon juice, paprika, cumin, allspice, turmeric, salt, and toss in some bone-in chicken and coat each piece in the marinade. Then add in some cut up or
Morning, colleagues. How are you?
Good morning, Chair. Well done yourself, Chair.
Can't complain, thank you. Mardia, just have a look for me. Saroj, I think that's how you pronounce it. I'm not quite sure. They in on two devices, and we can just be given an indication as to why. Oh,
Okay, I
no,
see that she's logged. Yeah, I see that she's
That's-
logged off. Yeah.
okay. Thank
Okay,
you.
she's the PLO for the DG Chair.
Okay, thank you very much.
Okay. We're just trying to we see we've got 3 members on the platform, Chair. We're just trying to and I see DMs on the platform already, but we just want to find out where the rest of our members are.
All right, I see Satoli's on, myself, Van den Berg, and that's that. I remember
Yeah, I've got one
seeing,
apology from
yeah,
Honorable Pina, but we're just going to call the rest of the members now just to see where they are.
and Farmer said that he might have problems as well.
Yes, yes. Okay, but we're just going to call the other members just to see where they are, Chair.
Thank you.
Okay, fine.
Good morning, DM. How are you?
I'm well, Chair. How are you?
Also well, thank you. Soapers are playing havoc with our attendance.
Sorry about that. Let's try our best.
No, it's something we have to do as NCOP members.
Yes. Yes.
But thank you for availing yourself. Let's just see who's. So far, it's just the 3 of us.
Morning, Chair and colleagues. Also, Honorable Machobian is here.
All right. Thank you. So that makes 4. Okay, we need one more, Madia.
Yes, Chair, we're just gonna follow up.
Dlamini and Modise. I don't know when their SOPAs are.
No, Mr. Matisse has already joined, Chair.
Oh, has he? Oh,
Yeah, he has joined. We're just gonna give Mr. Mabilo a call quickly.
Oh, I'm talking about Mabilo. Sorry. Honorable Modise.
Hopefully, Mr. Mabilo said he's joining now.
Okay, great.
Recording in progress.
Can I just ask something, Madia? Can you perhaps arrange that the automatic AI recordings that are instituted be removed, please? Because I don't like this AI thing. Myself and I think it's Honorable van der Berg, it says, has now agreed to this AI recording.
Chair, we must check because I think that is a thing with Zoom. That's like the automatic thing with Zoom. But we'll check. We'll check with IT, Chair.
Please, because I don't like it. Corbus and Sonia added read AI meeting notes to the meeting. Now it says here, type read stop to disable or opt out. Now, where do you do that? I don't want that.
Yes, no, we'll find out from IT, Chair, because I think that's an auto-generated thing from Zoom, but we will find out, Chair.
No, I don't want it, please. Thank you. All right, Madia, are we co-rated?
Yes, Chair, we are. I see Ms. Kennedy has also just joined the platform.
Okay, thank you very much. Colleagues, it's 10:01 and we have the Deputy Minister with us, Honourable Godlimpi. Good morning to you and good morning to all the members. And to ensure we don't waste any time, Madia, could we please have the agenda flighted?
I'm sure she will do.
Thank you.
Can everybody see my screen?
I can see it. Thank you. I think all the other members are able to see it. Colleagues, we have one item on the agenda and then the consideration and adoption of minutes. Could I have a mover and a seconder for the agenda? Sorry, could we just mute the person in the background?
Good morning, Chair.
Morning, Honourable Modise.
Yes, no, I was in the meeting, but at least you did say you were looking for Member Mabilo. I move for the adoption of the agenda as presented. Thanks.
Thank you, Honourable Modise. A seconder, please.
Honourable Mabilo, yeah.
Yes, Honourable Mabilo.
Good morning, Chair. Good morning, colleagues on the platform and DM and the team. I move to second the proposal by Honourable Mutise that we adopt the agenda. Thank you, Chair.
Thank you very much, Honourable Mabilo. Madia, any apologies for minute purposes?
Yes, Chair. Chair, we have apologies from Honourable Pina, and we've also got apologies from the Minister Tau and Deputy Minister Whitfield as well, Chair. Those are the only apologies we received.
Okay, and then I also saw Honourable Farmer indicating that he could possibly have challenges because he's got SOPA in Beaufort West. So let's just note that because I don't see him on the platform. Without, okay, sorry.
Okay. Thanks, Chair. Yes, Chair. Yeah, I think I should, Chair.
Okay, thank you very much. Without any further ado, Honourable Deputy Minister could I hand over to you, and then from there we hand over to the presenters, and once everything has been presented, we will then allow for questions and answers, and once we go over to the ordinary business of the day, the department and yourself, Honourable DM, may be excused, but you're more than welcome to remain in the sitting. Thank you very much, Honourable DM. Over to you.
Thank you very much, Madam Chair. I've been trying to recollect. I think it's for the first time in the 7th Parliament that the ECIC is appearing before the Select Committee. I might be wrong, but I don't quite remember.
No, you are right. You are correct.
Yeah. So I thought because of that, I need to give a bit of context to what this institution is, what it does, and therefore get into the report that they will be tabling. I am accompanied by quite a strong delegation of department officials, but including then the officials from the entity concerned itself. So the Export Credit Insurance Corporation of South Africa, which we refer to as the ECIC, is a state-owned entity that was established in 2001 under the Export Credit and Foreign Investments Insurance Act of 1957 as amended, to facilitate and encourage South African export trade and cross-border investments. So it's essentially an insurance company for exports. So the primary mandate of the entity is to promote and facilitate export of goods and services by South African exporters and cross-border investments made by South African companies in foreign jurisdictions through the provision of insurance solutions or underwriting of bank loans extended by South African registered financial institutions to foreign buyers and South African exporters. In the main, the entity provides both political and commercial risk insurances, which mitigate against the risk of loss or non-payment to South African exporters, financial institutions, and investors. And this support is crucial in enhancing the global competitiveness of South African exports. The ECIC's strategic focus includes promoting trade with Africa and other emerging markets, including promoting the objectives of the Africa Continental Free Trade Agreement. Now, Chair, I think the issue that I wanted to underscore on this front is that we are having this discussion about improving South Africa's economic prospects. And part of what we've said we want to do, which we said we want to do since '94, to be fair, but which we are now focusing quite strategically on, is to use Africa as a frontier market to build an expanded market for South African goods and services. So goods in the sense of tradable goods, but services in the sense of financial assets as well, and engineering services that we provide. Now, one of the things that any investor wants to be assured of is, if I sign a contract with a buyer in a different jurisdiction, and I'm supposed to supply them this, that, and the other, am I guaranteed payment? So you will say, yes, you are guaranteed payment because you signed the contract, but then they will pose the question, but what happens if they don't pay? Or what happens if someone attacks my lorry or truck when it is crossing the border with goods? How do I recoup that loss? That's where the ECIC comes in. So the ECIC comes in to ensure that should anything go wrong, you will get your money if you're not paid and so on. Or if the person that I'm trading with, or the country that I'm trading with, if they were to default and they're unable to honor their payments, what would I as a supplier do in turn? Then again, it comes to that level. The other point that I raised here is that it also provides political insurance. Political insurance is not so much provided by them as an actuarial product, but it's us as the South African state. And on a different day, it helps us to understand better why South Africa's leading role in Africa is instrumental, including the Defense Force being a leading peacekeeper in the African continent. It's part of a vital aspect of ensuring that the conditions for seamless trade are created and sustained in the continent. So the key functions of the ECIC on its part, it's providing risk insurance, as I was explaining. So it offers insurance that provides cover against political and commercial risks for South African exporters and investors, such as expropriation, currency inconvertibility, and a breach of contract. So the other one that it provides is financial support. So that financial support is in the form of financial guarantees and insurance to facilitate access to credit for exporters, thereby enabling them to undertake larger and more complex projects. That is in the instance where a supplier, a South African exporter, doesn't have sufficient financial muscle to fulfill an order or a contract, and then the ECIC comes in at that. But the other thing that it does, the third one, is market development. So by supporting South African businesses in entering and expanding into new markets, the ECIC plays a pivotal role in driving economic growth and job creation. And this is the point that I was making. Let me make an example, for instance. We are currently facing the ArcelorMittal South Africa challenge, where they are experiencing a business model crisis and they are considering closing their operations. That's in part because their order book is not as diverse in terms of markets as you would want it to be. They supply their steel domestically and in other parts of Africa. But what the ECIC does, because it ensures a lot of projects across the continent, it also has the capacity to say, as part of that insurance, so suppose someone is building a rail network in, say, from Kenya to South Sudan or to Kampala in Uganda, and the ECIC is brought in as part of the people that are insuring that project. The ECIC can say, as part of our product offering, we can also provide you, as the rail developer, access to cheaper steel from South Africa, which would mean, in that sense, South African steel manufacturers would find themselves receiving a contract outside South Africa at the back of the market work that the ECIC does. Now, over the past 10 years, the ECIC has successfully supported 46 projects, and their approximate value is about 33 billion rands, which has helped South Africa's export growth. And as a result of this, it's estimated that about 11.72 billion rands has been added to the South African GDP. And at the back of that, some 49,174 job opportunities have been created or sustained in South Africa. And the fiscus has received 3.7 billion rands over the last 10 years at the back of the work of the ECIC. The corporation's efforts have not only bolstered the country's economic development, but also strengthened its trade relationships with key international partners as well. Now, there are issues that you will receive, or you will hear them say when they provide the report, but I thought, because we've been interacting with them for a while, I must just give the political overview on those issues. Some of them are technical, relating to accounting standards. Some of them are political, related essentially to the risk aspect of the insurance that they provide. And the others have to do with political risk in projects that we are participating in, but some political developments have sort of stalled them and are threatening them. So the first one is about their accounting system. So what happened is that there's a new accounting standard for insurance companies called IFRS 17, but the CFO can explain that in detail. So this new accounting standard for insurance companies has changed how insurance companies account for their revenues, including how they account for salvages and expenses, and has introduced judgmental issues that do not have any precedent or established market practice or principle. These challenges have been experienced by insurance companies globally as they implement the standard for the first time. So the ECIC was also affected, which led to delays in the finalization of the external audit for its financial statements for the 2023-24 financial year. When they present, the CEO will explain what the material changes of this accounting standard does. What it does, essentially, it gives you different final balances on the year that you are accounting, because and so differently to what the other accounting system that they were using would show you. But the CEO has an easier technical way of explaining how that happens. The second issue are claims that were paid in Ghana, one of the jurisdictions where the ECIC's insurance portfolio cover. So Ghana represents over 40% of the ECIC's insurance portfolio, and claims of 157 million US dollars have been paid in the last 2 financial years. The Paris Club restructured a portion of Ghana's sovereign debt by public institution, which amounts to about 5.2 billion US dollars. And the terms they are not favorable, as the ECIC and other public lenders and insurers will have to wait for approximately 17 years to be repaid by the government of Ghana. So here is the issue about the defaulting of Ghana. So Ghana ran into fiscal problems at the sovereign level. And when financial institutions were calling in their debt, because Ghana had now defaulted, that debt settlement program is now managed by the Paris Club. Now, the Paris Club are people who look at the obligations that the country has, and then they try to structure how the country will honor these obligations over a time period. But the problem with the Paris Club politically is that their prioritization list puts African institutions at the back end. So essentially, the Ghanaian government is going to start paying its debt mostly to external lenders outside of Africa. And as you can imagine, on the basis of that, which they are doing, South Africa or the ECIC is only going to get its money from Ghana in the period 2039 to 2024 to 2042. So we'll have to wait for approximately 17 years. Now, that's a political problem that we're trying to sort out about the ordering of priorities in settling debts, and to kind of move away from the Paris Club because it's unfavorable, to us. The third issue that they will talk about is that the corporation actually has a healthy pipeline of projects valued at more than 6 billion US dollars. But the problem is that some of these projects have experienced major delays, as I was saying, due to commodity price downturns, some of which could not be predicted. It was as a product of some geopolitical development. Then there are security challenges or sporadic political violence. So we have an LNG gas project that they are working on with Total in Mozambique. But there's this, and it's in the Cabo Delgado province, where there was the Islamic insurgency that sort of just started off a wave of violence in that region. But the situation over the past year has been improving, and there's a sense that the project will continue, and therefore we will realize some of the gains that we were hoping for. So you have these moments where political instability comes in. In those instances, because we are politicians, virtually all countries that are invested in such situations have to pose the question whether ensuring peace and stability in those regions is not in their national interest, and therefore consider the interventions of their military forces. But of course, South Africa did not necessarily go to Cabo Delgado with that in mind, but there was a joint African force, including with Rwanda, that went to that region and has tried over time to stabilize and stymie the tide of violence in that region. But the point is, if we don't successfully as African states deal with the waves of violence that prop up in particular regions in the African continent, including the insurgency that is driven by Al-Shabaab in the Horn of Africa, coming all the way down via Somalia and up to Mozambique, we will not be able to realize the strategic growth projections that the African Continental Free Trade Agreement gives us. Anyway, they will expand in detail in their presentation and their product offering and the impact that their product offering has on the South African economy. And they will delve into detail about some of the issues that I have raised. and the key challenges that they are faced, and some of the opportunities that will emerge, including then the strategic objectives of their budget for the 2024-2025 financial year. So thank you very much, Chair. I thought let me first give you guys that sense, since it's the first time that we are appearing here. And as I said, I'm accompanied by officials from the department. That includes the Acting Director General, Ms. Malebu Thompson, and then there are officials from the ECIC itself. There's Warren. I hope Gilbert is somewhere in here. I saw there was Velem as well, who's from the TTIC, who works closely there. And then there's also Nomti from the Office of the DG. And then there's this is Nontombi Matomela, who is our Chief Director working with entities. And then there are staff members from my office. There's the head of office, Mr. Ndutugo Makomboti. And then there's Ms. Ongezwe Zipate, who is the parliamentary liaison officer. And then there's Tulufelo Mushu, who's the director in the ministry responsible for parliamentary liaison. So I thought, let me give you those names as well, so that you are not shocked by the names that you see appearing on the system. Thank you very much, Chair.
Thank you, Honorable DM. It definitely makes more sense to me now after that explanation. But could we then ask for the acting DG to take over from her? Thank you.
Thank you, Chairperson. Chairperson, the presentation is going to be done by the entity itself. As the Deputy Minister has indicated, we will be taking you through Q2, Q3 performance. And as the Deputy Minister had also indicated that going forward, as we roll out an Africa strategy at the back of the Africa Continental Free Trade Area, this insurance institution of South Africa is increasingly going to be very important for manufacturers and providers of value-added services as they venture out much more than had been the case onto the African continent. So I will ask Gilbert, who is currently the acting CEO, to take us to take the committee through the presentation. Thank you very much, Chair.
Thank you, DG, and thank you very much, GM, for that background. And I just want to say good morning to members of the committee, and good morning to the chair. It's quite correct that we are appearing for the first time to this committee. Obviously, as the DG and DM have said, ECIC is very critical, in promoting goods and services. It's also very critical in assisting them to manage the risks that they face in the countries where they make investments or where they sell their goods. So obviously, when you look at the work that we've done, it's very interesting. But I do know that a lot of people, when you ask them about ECIC, they will be very surprised that there's such an entity. But we are there, we are trying by all means to grow the South African economy and to ensure that, our goods and services find suitable markets. So our presentation is in 3 parts. I will do the first part, which covers the mandate, the historical background and some of the performance. Then the second part will be presented by Mr. Warren Kuhn. These are our performance objectives. And then the last part will be our corporate plan. That will be presented by our CFO, Ms. Lord Lutando Mkataza. Can we move to the next slide? So our vision and missions are very clear. In terms of our vision, we want to be, a world-class export insurer, that facilitates South African export trade and cross-border investment globally. And we have been successful, as the DMS said, that we have to date underwritten about 32.8 billion, dollars, rands worth of projects. So in dollar terms, that would be around $2.5 billion. Then in terms of formation, we want to provide, insurance solutions that support South African goods and services. And in the process, we want to apply best practice in terms of our underwriting and risk management principles. Obviously, these are very large capital transactions. They require a lot of dedication in terms of negotiating, the structure, making sure that the terms thereof are robust, and they also mitigate some of the risks that we see, and make sure that, eventually the project gets carried out, completed, and deliver the goods that they need to deliver. So that is our foremost, objective, that the projects that we underwrite, they need to be economically and financially sustainable. Next slide. So where do we derive our mandate? We have our enabling legislation, which is the Export Credit and Foreign Investment Insurance Act, number 78 of 1957. Obviously, when you look at that, it's quite an old act. It dates back to 1957, but that also indicates that South Africa has been involved in the export, credit business for quite some time. Previously, there was an arrangement with a private company called Credit Insurance Guarantee Corporation. It used to run the business on behalf of government. They were the primary insurer, and government was reinsuring the business. However, that arrangement came to an end in 2002, when it was considered necessary to establish our own ECA, which is ECIC currently, and that was set up in 2002. And then we started running the business there. We had two books with the reinsurance portfolio that we inherited from CGIC, which has already been settled. So that portfolio does not exist anymore. Then we've since then been building our own portfolio, which we have built up to the value of 32.8 billion rand to date. We are regulated by both the Prudential Authority and the Financial Services Conduct Authority. And this is a very unique arrangement because usually worldwide, ECAs, they work very closely with government. They are also very linked to the central banks and the national treasuries. So there are entities that are normally regulated by their own legislation. But here, for our purposes, we are regulated by these two regulatory authorities. And that also ensures that we comply with the capital adequacy requirements. We do not just underwrite without enough capital. We have to comply with certain ratios that we report on, and submit the reports to the Prudential Authority on a quarterly basis, to make sure that we are financially sound. We are a Schedule 3B entity. Previously, when we set up, ECIC tended to concentrate more on capital goods and related services. Those were the transactions that we're supporting for the longest time. However, there was always a debate around whether should we be entering the short insurance business or not. But given the arrangement that we had with CGIC, that used to be the primary insurer under the old arrangement, they were running with that book, on a private basis. So there wasn't a need. But, as time goes on, we had a reflection again. And also following the 2008 financial crisis, a lot of ECAs, tended to move into the short-term space. Some of them also had, financing capabilities. They were able to fund transactions directly. And that was done to promote, the SMMEs, to also reject the stagnation that was there at the time, and also to deal with some of the economic challenges that arose at the time. But since then, the world has changed, and even in our case, we have had to really look at our mandate and see whether can we play into that space, especially given the needs to support your small exporters, your entrants, exporters, especially your BEEs, entities. Then we looked at our mandate in 2021, and that was expanded beyond just, underwriting, transactions that involve capital goods, for exports. So we are now able to underwrite consumable goods, These are normally transactions that are found in the short term. Obviously, the chain is very important in this case. And this transaction, they normally have a tenor of up to 180 days or just below 2 years. So we are in that space. We did our business plan and strategy in 2023. We have followed on and produced, products that I will take you through in the coming slides. Then the other capability that we've got now, we can offer, insurance cover in euro-denominated currency. Previously, we didn't have this capability, and it was a bit of a challenge when we went to, West Africa, where transactions are done mainly in euro currency. So with this new capability that we've got, or added advantage, we are now able to provide, offerings, insurance solutions to the West African market in euros. In fact, some of the Ghana loans that we had were in euros and converted back into dollars, but now we can just do the euro straight currency without any problems. And then we are setting up a separate reserve account, to underpin, that exposure in euro. So the premiums that we'll get in euro currency, will not be converted into dollars. They will be kept in a separate account, where we'll build the capital, to cover the euro-denominated transactions. Next slide, please. Why is it important to have an ECIC cover? Or what is it that we offer? What is the value proposition that the ECIC insurance provides? There are a number of advantages. Some of them, the DMS also alluded to them. However, the key ones that we need to put forward to the committee, is to facilitate financing of cross-border projects. So using our cover, we are able to mop up funding from the different banks, to finance a specific transaction. So for example, in Ghana, we've got a power plant, that generates power using gas and also heavy fuels. And there's a number of certain banks that are participating there that have provided different tranches. So that is the essence of the coverage that we've got. We have also done a transaction in Zimbabwe. We call it the Zim bonus. It's the Bed Bridge border post improvements that were done on the side of Zimbabwe. And there again, we had a syndicate of banks that provided that funding, including some of the investors who are covering. And very interesting, that project has gone very well. And then we also facilitate exports of goods and services, and job creation. And I think this is the heart of our mandate, to create jobs for our people and our masses. Then the other advantage that we give through our cover is to mitigate the risk of non-payment, of course, due to the commercial and the political risk that we're covering. Again, here it talks to our ability to pay claims, and we've done so without the need, to ask for the bailout. Then we also play an advocacy role in mitigating potential claims. And this is very important. I think some of the elements of this have been highlighted by the DM, the intervention that we can make militarily. But in our case here, we engage with the politicians, the project sponsors, to find solutions to specific challenges. If a project, is defaulting or is on the verge of defaulting, obviously our intervention is very key. We play our advocacy role. We escalate matters to the relevant political authorities within the DTIC. We liaise with our embassies in the different jurisdictions, so that they can assist us in setting up meetings and sitting with us in those discussions. And to date, we've played that role very, very well. In fact, we're in the middle of playing it now. There is a project where there are issues, and we're trying to get the parties, to meet. I think in the next 2-3 weeks, we will be in Ghana, sitting with the new administration, discussing the challenges that they have, financially, and also trying to get the commitment and the assurances from the new project. Then restructuring is also very key. The reason why we are there, we give comfort to the banks. So as part of our advocacy role, when we look at solutions in terms of how can we avoid risk from materializing or cushion us against, paying a claim. We sit with the project owners, we look at different ways, and the key one is restructuring a project to give it, a smooth ride. You extend the debt over a longer tenor or you defer payments over a longer period. So those are some of the solutions that we look into. And this plays very well because ECIC will follow in terms of extending its coverage, which gives comfort to the banks. They don't accelerate if we do that. They will rely on the fact that we are willing to extend our terms, we're covering them, we're still there with them. And they see this as a partnership, between us and them. And we've done this on a number of occasions. And it has saved ECIC a lot of money in terms of claims that we could have paid, which have been avoided. Next slide, please. What are the key risks that we cover, when you look at both the short-term insurance, medium to long-term, these are the key risks that ECIC covers. We cover commercial risk, which is insolvency, and protected default, that would be typically non-payment in simple balance. And then political risk, it's got all of these elements: breach of contract, where the government breaches the contract, we could end up in litigation or arbitration. Breach of sovereign financial obligation, here is where the MOF or the Minister of Finance has provided a guarantee, underpinning a particular loan that has been extended to the sovereign. Obviously, if the government fails to pay under that guarantee, then we can pay a claim under breach of sovereign financial obligations. I think that is a case in point in Ghana, but I'll explain more when I get to that point. Then expropriation, if the government decides to expropriate a particular project, then we can pay a claim. Then there's also change in law. Obviously, this change in law must have a direct impact on the project that we've underwritten. Then the other key risk that we cover is currency convertibility and transfer restriction. As you know, the continent has got an endemic problem, especially most of the countries, they experience, currency shortages. If you look at Zimbabwe, I don't know how many, pseudo currencies they've introduced. Each time you look at them, they're putting in a new currency. Now we've got the ZIG, we used to have the green bond. I'm just using that as a particular example, just to underscore the fact of how these currency challenges emanate. And obviously, if there's shortages of hard currency, that put a lot of squeeze on projects that rely on hard currency to service their debt, including the sovereign itself. Sometimes there are restrictions, companies are compelled to declare the hard currency within a particular X of day, just to support the import cover, for government and to use that money to prioritize other import and export transactions. Then you've got war and civil disturbances. Yes, this is quite a big risk. When you look at Mozambique, that's a case in point, even though they're not yet, you cannot say they're in a war. Maybe if you look at Sudan, that would be a perfect example where you've got an internecine, civil war where the parties have been fighting, quite extensively. And that has an impact on a project, that's operating from that particular jurisdiction. Because of the war, you won't be able to do anything. And that can lead to non-payment. And then again, ECIC will be called in to pay a claim if we've insured that particular project. And the risk percentages, they vary. I don't want to bother with you because this is more technical stuff. Then the other risk that we cover is non-performance. This is related to bonds. As part of our short-term insurance, our new line of business that I've spoken about. The typical instrument that we're seeing in this regard is advance payment bonds and performance bonds. And, for a claim to be triggered under these instruments, obviously, our South African supporter need to, to be unable to carry the project, either due to insolvency or just non-performance. So we have been covering these instruments. That's what we're seeing quite a lot now in our portfolio. Next slide, please. Then what are the targeted sectors that we support? These are in line with the master plans. We will also support the industrial policy, which is geared to, exports. It's an export-led policy. So we feature in very well there in driving exports. So these are some of the key industries that we look at. The new ones, we call it the green economy. We're looking at battery value chains, the green economy, digital economy, cannabis and hemp. Obviously, in the greens, we do know that we don't have a lot of capacity. We cannot support solar projects, because most of that equipment, it comes from China, and it's something that we probably have to look at as a country to say, how do we build this nascent, industry so that we can have capability to support some of the solar projects. We're talking about a lot. We've got the minerals, we've got the PGMs. So those are some of the things that we've got to look at. How do we do value-add manufacturing locally so that we can export finished goods? Then some of the labor-intensive textile, leather, footwear, agro-processing. Steel is a big element of our exports. Metal fabrications and aluminum. Then in terms of export potential on the automotive, and this is where we've been playing quite a lot on the automotive. We've got a couple of transactions that we've supported. Then you also have chemicals and plastics. And then in terms of the aerospace and defense, Chair, this is a very, very, very interesting industry. We've been trying to make inroads to support them. But some of the banks have taken a particular position in terms of not financing military equipment, because they also want to know what is the intended destination or use. Are they going to end up in a war zone? Are they going to be used to fight in a particular jurisdiction or not? So there are those moral issues, that affect this industry. And the banks are willing to provide working capital to them, but they're not willing to support specific transactions for the reason that I've mentioned. And it's something that we've been discussing with the DM to say, what can be our intervention in terms of looking at the financing solution that we can put forward. Then in terms of the ocean economy, it's still it's another lucrative industry. Previously, ECIC, we have looked at a number of projects, prawns farm projects in Suriname as well as in Seychelles. Some of them worked, some of them they didn't work because of the salinity. They are very technical and very sensitive to salinity volumes in the seawater. So you need a very good technology to run those things. But yes, we do see opportunities. Pharmaceuticals, the vaccines, I guess the COVID vaccines, they do set a very clear example of what we can do as a country and also export the vaccines. And then the medical technologies, there are a number of companies that are involved in this space where they supply medical equipment. And the electro-technical industries and white goods, so those are some of the industries that we're supporting. Obviously, in our quest to deepen our support through the short-term insurance, we're not alone in this journey. We have partnered with IDC, NEF, the DTIC, and we've been in engagements with SET for the new entity. And then, we are looking at a number of solutions to support, 3 tiers of exporters. The new entrants that will go through an incubation process, and those that are already manufacturing and ready to export, and those that are already exporting. So we're looking at the entire export trade value chain, and to see how we can deepen our support. So one of the things that we picked up was that we did not get all the complementary products from entities such as IDC. They're not very active in terms of trade financing, facilities. They do provide working capital, equity and loan, but when it comes to bonds, those typical trade financing, solutions, they're not the, I'm talking about discounting and factoring, all those kind of nice things to have. So, which are very important for exporters anyway. So we have had that discussion in terms of, can they look at, expanding their product range? So that discussion has resonated very well with them. But however, for us, in order to close that big gap, we are still utilizing the banks to support the bond products and other related trade financing products. Then we're also engaging with Afri-Exim Bank. We want to leverage on the AFCFTA. They've got a very good, large footprint on the continent. And they've been doing some wonderful stuff, They've been saving a lot of, governments or sovereigns that have run into fiscal challenges. For example, in Zimbabwe, they are keeping that government afloat. They provided a number of facilities there. In Ghana, they provided about $750 million, to prop up the foreign currency levels to allow for exports and import transactions to be settled. Then in Nigeria, they gave the Nigerian government about 3.1 billion, in order to deal with the currency shortages. And we have also partnered with them in SATIP 1. That program was meant to support projects, especially in the SADC region. And that 1 billion was taken up by a number of projects. They gave us a guarantee of 270. They also got involved in Zimbora's, the LNG transaction, and a couple of transactions. We are now in discussions to see if we can repeat that program. So they've said, yes, we can, Obviously, there are, discussions that are ongoing there, and we've just been talking about the timing to launch that. And they've got appetite, to set the total value of that program between $3 and $5 billion. So we'll see how the discussion will go, but that entire envelope will be within that range. Next slide. Well, this is the suite of our short-term insurance products. These are all newly developed products within ECIC. We are testing them. We are making sure that they work. We have also revisited some of the underwriting criteria, to suit, current circumstances, where, companies are snooping, under financial balance due to high interest rates, So we've loosened some of our underwriting criteria to be alive to that environment. So we've got a working capital facility, up to 2 years. A company can apply. If they get a facility through the bank, we can provide insurance to the bank directly. The bonds, advance payment and performance bonds that are very critical. We provide insurance, but the primary issuers will be a bank, or commercial banks that we deal with. Then in terms of trade credit insurance, this is a new product, that we have had to do a lot of research, and come up with it. And it is the mainstay of short-term insurance. CGIC, is the biggest player with these products. They dominate the market. They've got about 85% of the short-term insurance market through this product. So it's a very key product. It doesn't need a bank. How it operates, in simple terms, you provide a trading limit to the foreign buyer, and our exporter can trade with the foreign buyer within that limit. And the good thing about this, you review it on an ongoing basis. If circumstances change, you can increase, you can decrease. It's more like your overdraft, with a commercial bank. That's how it operates. If your credit score deteriorates, we can reduce it. If there are political, threats or changes, we can also look at that. Any hindrance that will impact on the trade, we're able to make those adjustments, downwards and upwards. And it doesn't need a bank. So it's between the exporter and the buyer and us as the insurer. We insure non-payment, of course, of invoices. And those invoices have to be declared on an ongoing basis. If the exporter doesn't receive payments, they have to notify us to say, hey, there are outstanding invoices. There's 30 days due or 60 days due, depending on the payment term that they've agreed upon. And then we're able to say, hey, you can stop trading with this, or be cautious, or extend the terms for the payment. So those are some of the interventions that we can make with that product. Then we also have supply credit. Here we cover the exporter who provide vendor financing. For example, an equipment on a lease to buy basis or with some of the credit terms. We have done a couple of this previously, so we've enhanced this product. Buyer's credit, this will be a normal, export credit on a short-term basis where the bank is providing the liquidity. Then the export passport program. This is an initiative. I've already touched a bit on it. It involves ourselves, IDC, the DTIC, NEF, and we're going to take this to the commercial banks as well. And this gives us an opportunity to really deepen our support to Black industrialists as well as emerging SMMEs who have ambitions to get involved in export trade. And the program, as I've said before, is got 3-tier elements to it. You've got support to entrance, which can be incubated, or they can exposed to a training, in terms of how they deal with export. The DTS has got a number of interventions in that regard that we can utilize. Then the second tier is for those exporters that are ready to export. That just needs to be introduced to different markets and match made with foreign buyers. And then the existing ones, those are established ones that will need to be expanding their business so we can support them throughout that. So for over the next 5 years, we have provided a capacity of about 9 billion rand facility. So that is the maximum that we can underwrite, but this limit is not cast in stone. So obviously, if there's appetite, we can revisit it and increase it, to a higher amount. Next slide. Then in terms of the MLT product, this is our medium to long term. This is our mainstay of the business. This is where we've been playing for the longest time. We've been doing a lot of export credit transactions under the MLT. So there we've got 3 key products. For exporters, our exporting companies, we can give them pre-delivery risk cover against non-payment. And again here, the perfect example would be where an exporter is required to manufacture a good before it gets exported. Maybe a processing plant that gets, assembled, that get manufactured, assembled, and shipped as a complete, or maybe disassembled and assembled on site at the destination, then we can cover that risk. If there's a political risk event in that particular country that prevents the delivery of the equipment, then we can chip in and compensate the export. Then the supplier credit, I've covered that. This is where the exporter provides, payment terms. Then there's also the lease of equipment or return of equipment. Here's where equipment is leased. We've seen that a lot in the rail, where the locals and the locomotives and wagons are provided on a lease basis. Obviously, depending on the nature of the lease, whether it's good maintenance, whether there are options to buy the equipment at the end of the lease, we look at all of those permutations. Nevertheless, we do provide the exporter with a cover to return the equipment, at the end of the lease, in case where the foreign buyer is not interested in buying the assets. So that equipment can be returned. We've also seen this with new equipment as well, and the cover works very well. So obviously, it does give that competitiveness, to exporters when they do their offering, then they can get a complete suite of, insurance solutions. Then we've got the investment insurance. Here is where South African companies invest in foreign entities. I think the classical example, we've had MTN in Iran, where we'd cover them for almost $500 million, worth of insurance program that we've put in place. And there we cover base equity, that the company contributes, and also shareholder loans that are provided to support the business. And we want to provide political risk insurance there. And I must say, it has been a very interesting line of business that has kept ECIC afloat, for quite some time. So obviously the dynamics have changed slightly. So that line of business has reduced, but it's one of those that we need to always refresh and get our companies to invest in foreign countries. Obviously, some of the current challenges, on the continent, we know in Nigeria, MTN faced, high taxes. There are some of the companies like Tiger Brands that have withdrawn, so there are some of the challenges that our companies are experiencing on the continent. Obviously, the investment climate need to be very friendly from the host country's perspective. Regulations need to promote, foreign investment and also protection, of ownership. Then in terms of the banks that provide, the loans, these will also include your institutional investors such as Sanlam, and Liberty. We have also funded a number of transactions with them. They are also involved in some of the projects that we've underwritten. And there you've got a buyer's credit, which is a typical loan that gets provided over a long term, depending on the requirements of the project. And we look at a number of projects there: project finance, corporate, and also sovereign lending. All of these are structured. They involve a lot of engagements. There are a lot of reports that we look at. If it's a mining project, you'll be interested in knowing how does the commodity price outlook looks like. And then we do look at the various price assumptions, also factor in the downturns, we stress the financial models that we get. And again, the key thing is look at the reserves ground to be mined, and for how long, at what strip ratio. All of this, we look at them. The ESG issues also play a big role in this. So even with some of the sovereign projects, you do get similar issues coming up. And then we also do a detailed due diligence to make sure that we address all the risks. So that's the reason why, in Mozambique, even though we've approved the LNG projects, we haven't been able to support the implementation because of the insurgency that broke out in 2021. And since then, those projects have declared, force majeure, until the security situation is settled, there's very little that we can do because we see the risk. However, in terms of managing that risk from a structural perspective, the project is underpinned by big or supported by very good, reputable sponsors, A-rated credit. Their credit standing is A-rated. So they've got very good financial muscles to carry the project. In fact, to date, they've invested more than $10 billion of their own money. So there's work that's underway. Even some of the long lead items have already been placed. They're being manufactured outside. I think South Korea is one of the places, and then China as well. They're manufacturing those platforms. So obviously, we need to be comfortable that structurally the deal makes sense. Even before we factor in, our ability to pay that claim. So structurally, the deal needs to be sound, because we're not just looking at just financing it and it working. We're also looking at the downside scenario. If this project tanks, what are our salvage prospects? How do we salvage? So it's a very interesting dynamic, because from an insurance perspective, you have to find a fine balance between the two elements. When you pay a claim, you have to salvage. I think with sovereign transactions, we don't have an option. And I think the DM has touched on that. And the reason being that, when you lend directly to a sovereign, it's direct to the MOF. You don't get security over the assets, unless if the project is an IPP, or a triple P, or BOT, then you can get some measure of security over the assets. But if it's straight sovereign lending with the Minister of Finance as the direct borrower, our prospects are dimmed, because if the government defaults, there's cross defaults across the other facility. They could be having long-term bonds, and that creates a serious calamity, because the government will end up going to the Paris Club. And as the DM said, at the Paris Club, they're heavyweights. Those discussions are chaired by China, which in most cases, you'll find that it is the biggest lender to that particular country, and then you've got France that coaches the discussion, and then you've got USA and all of the other big countries. And, in pre-baking the deal, they also they prioritize their bilateral arrangements. And before they go to the Paris Club, or even when they go to the Paris Club, in parallel with those discussions, what we've learned is that they'll be having a discussion with the data country in terms of what are the, what is it that they can offer in terms of other concessions, and that also influence the outcome of the terms of the debt restructuring. For example, with Ghana, China, they were busy co-chairing the discussions, but at the same time, they were discussing with Ghana on how to build a petrochemical plant in the next 4 years, and about $12 billion of investment. So even if they were to say, we'll wait until 17 years, for them, it makes sense because they can recoup, that loss from other projects. For example, the petrochemical plant that I was talking about. So that's where it makes a big difference, and I think we have tried by all means to make our voice known, but obviously it's not an easy discussion to have. Sometimes it does require a lot of political intervention at the right levels. But in our case, I think, it's one of those lessons learned, and we've been in discussions with Afrexim Bank. They've got an association of multilateral creditors, because, they've got preferred creditor status, which has also come under attack at the Paris Club. So their loans were not caught up in the debt restructuring, but there were noises about the fact that they need to be part of the discussion and their loan needs to be there as well. And for example, US Exim, they've got their own preferred creditor status, embedded in their own legislation, but they don't use it. They follow what the outcome of the Paris Club discussion will be. So I think there's a growing sense that those entities that have got preferred creditor status, they need to be part of the bigger lending group and get a fair share of the deal that everybody negotiates and agree upon. Next slide. Just to take you down memory lane, 10 years, over the last 10 years, since 2014 to 2024, what has been our contribution? I think we've already alluded to this, that the value of supported projects over the last 10 years has climbed to about 32.8 billion. That was about $2.5 billion, worth of projects and investments, the 46 export-led projects that ECS has supported to date. Next slide, please. Then in terms of the value added to SA economy, you can see here what we've added, about 11.72 billion, to our GDP, which is quite a phenomenal contribution if you look at it. Obviously, you can see we're very busy since 2014 to 2018. We had a number of big projects there, we did a couple of projects in Mozambique, the Nakala, project, which we had covered about $400 million, and that included the mine, the rail and the port, but we're only focusing on the rail infrastructure below the rail network. And it was a phenomenal investment. We had partnered with Mitsui and Vale, and again, the angle of BRICS collaboration came into being there. And that project has since repaid us. It didn't take them 2 years to do that. Then we also had MCK mine in Konkola copper mine in Zambia. It was part of that. Then we also did MTN in Iran. That was about $525 million, and that has since fallen off as well. MTN canceled the policy. So those were some of the big transactions that we did. Obviously the dip you can see is because of COVID when it started. In 2019, you would have seen a spike here, had we done the Mos LNG projects, because we've completed the negotiations around 2019-20, and then in 2021, then the security or the insurgency problem erupted, and that project was halted. Hence, you've seen a dip over the years, and then a bit of spike in 2021. We did a couple of transactions in Ghana, the Amande Real, Amande Hospital, and also the effect of COVID at that time. So yeah, so the other dip you can see is also a result of paying claims. We've been paying claims, 2023. In fact, 2022, we paid a huge claim in Lesotho. And this was paid to upsize. It's for a diamond mine project that has been experiencing challenges. We're still restructuring it. The claim was around $55 million. Then 2023, we paid, the two Ghana claims, which was Amande Rail and Amande Hospital. Then the last claim we paid last year in May, which was Tangachip, around $55 million as well. So when you've got a round on your book, obviously everybody stands and see if you've got a capacity, to underwrite. But I must say to date, we have recovered most of those losses. We are on a good trajectory, and we're also seeing our pipeline growing. We've got a number of nice projects that are coming. And in the last 2 weeks until yesterday, we've been having engagement with the commercial banks, discussing the pipeline issues. What are the challenges? So obviously, they have said, what are the big challenges that they're seeing in the market, and we're kind of trying to work through some of these things. But I think the future looks good. We're hopeful that the Mozambican LNG projects will come on stream. And it's 2 projects for one day. We've got the Total, then we've got the ExxonMobil. And the ExxonMobil, because of the elections that happened in the US, we're not sure whether US Exim will fund or not. But we have since gotten confirmation that they're a good prospect that they'll be coming. ExxonMobil did reconfirm last week that they're still committed to the project. So which gives us good insight that hopefully, even with Trump at the helm, there could be some good, thing that could come out, because we need about $10 billion from US Exim for both projects, and we also need to sort out our potential gas cliff, due to Sasol's gas from Mozambique going to run out, I think, end of 2026, 27 there. So there is a solution that we're working on, to bring gas to SA, to address the potential shortage, and also to save the entire petrochemical industry and domestic gas, supply. Next slide. So this is the jobs opportunities that we facilitated, almost 50,000 over the last 10 years. And you can see the blue line. During the implementation of the projects, yes, you do get a number, quite a huge number of jobs being created, because that is during the drawdown phase. This is when goods and services are being rendered and delivered. And the yellow bar line, it represents the operational phase. There you will still have some residual, services being rendered by consultants that are retained, but it tends to be very small. Next slide. Then in terms of the revenue that we've contributed, yes, we do pay taxes, a lot of it. So we have to date contributed around 3.7 billion, worth of tax that we've paid to the fiscus. Next slide. Then this pie chart, indicates, it gives you a clear picture in terms of the spread of portfolios, and, our portfolio is predominantly residing on the continent. We do not have anything beyond the African continent. We used to have a power project in Turkey called the Iskandar that we did many years ago, That was repaid and finished. They went on to do phase 2, but we didn't participate. And then we also had a prawns farm project in Suriname, which didn't go well because of the salinity. So those were the two projects that we've done outside of the continent. Otherwise, as the DMS said, our focus is the continent. The continent is our bread and butter. That's where we need to build our portfolio and open new markets on the continent. So in terms of this pie chart, you can see Ghana is still our largest, exposure, followed by Zimbabwe, then Mozambique, then Angola, DRC, and then a couple of countries. However, this picture, it does highlight a certain concentration spread, which is likely to change. In the next 3 years, I think the makeup of these projects will have changed. This pie chart will look very different. Next slide. So this slide, it just gives you the granular aspects of the projects that are there, and the percentages, which sectors. I'm not going to go through it, but you can clearly see the power is our biggest exposure, to date. We've got the Sun Power project in Ghana, and then we also have 2 gas-fired, power projects in Mozambique. They are an offshoot from the Aramco pipeline, which transports Sasso gas from Mozambique, Pandatamani fields to Secunda. Next slide, please. So this slide gives you a history of the claims that we've paid to date. Very interesting. What I want to say is that we have managed the business on a sustainable basis. So when we do the underwriting, we're not thinking about running into the fiscus, to capitalize us. So when we look at transactions, we look at our capital available, what we can stomach within our resources, and onboard the transaction on that basis. Obviously, it doesn't mean that one day, there could be a need for us to engage with the DG and the DM, when the situation arises, we will probably be needing to be capitalized. But to date, I don't see the need for that. Even with a big project in Ghana, the Sun Power project, even if it were to tank, we will still be able to pay that within our resources. Obviously, the impact will be on our underwriting capacity that will reduce as a consequence of that. But yeah, we're financially solid and very sustainable. So all of these claims that you see here, we have settled them in full. There's no claim that is outstanding or owing. We have settled all of these claims. In some cases, we've been able to make full recovery. For example, in Bavariskoye, it was a very interesting set of circumstances because the mine was a gold mine. However, when they started mining, they were getting other byproducts, like copper and cobalt. So there was another company that was interested in buying the mine as a going concern because they were interested in the byproducts. So we did that equity deal. We restructured the debt into a corporate. ECIC settled the claim in full, and then we recovered with the banks. And very interesting, the banks had a hedge book, that was sitting at about $120 million. So they had vested interest in recouping that. So they were able to be repaid, including ourselves. We recovered very fully. So hence I said, the salvage strategy is very key. So at the point of underwriting, we also do scenarios in terms of what if we get a hit, we get a claim, what will be our net exposure? If we're to salvage, how much will we be able to salvage? And again, because of the standard, we have to do that very often. Next slide. So this slide just indicates the benefits. We're trying to look at, are we still delivering on our mandate or not? Even if we have to settle those claims, what will be the content achieved? So overall, we can see, at least 60% there across the board. We do get the content right. So it was just for illustration, just to look at the benefit, just to reconfirm our mandate. Because some of these claims we settled, they're quite big, and they're settled at different stages of implementing the project. Next slide, please. So this is our contribution to educating young students, graduates. And to date, I'm very proud to announce that through our SED program, Socio-Economic Development, which is part of our BBBE scorecard, we have supported 136 students. So we're looking from the period 2021, to date, or 2023. So we started with this program, quite long ago when the scorecard was introduced. And we've been running this program very successfully. Obviously, the key thing is to educate, to make sure that we keep our youth busy. They need to learn, upskill, so these are the various interventions that we've put in place, the number of entities that we work with. We support actuarial science and mathematical statistics students. We also have an MPhil, development finance program. And this program was developed by Stellenbosch with our input. So we're very much involved in crafting the curriculum for that program. Next slide. Here, this just gives you a breakdown in terms of, the race and also the gender. But in the main, you can see, if you look at the number of males, we have supported a lot of males, over the period. Next slide. Then again, this is the total breakdown, of the financial literacy program that we run. Again, this is part of our SED program. You can see the reach, that we've achieved, even across races over the last 4 years. It has been phenomenal. It's quite encouraging. And there are a number of programs that are offered through the financial literacy program that the students attend. Some of them are online based, the e-learnings. Next slide. Yeah, these are the programs that I've been talking to. I'm not going to go into detail. Next slide, please. This is our enterprise and supply development program. It's part of the BE scorecard. You can see the number of entities that we've supported over the last 5 years. It's quite phenomenal when you look at it. As supply development, most of the entities that we've supported, I think they're about 47, and they tend to be concentrated in 2 provinces, Gauteng and Western Cape. Then for the enterprise development, again, most of these entities, they are also involved in export trade. There are some of the guys that are exporting their goods, which is very interesting. And then some of them will pick them up through the export passport program that I've spoken about. And again, there you can see we've supported a considerable number of entities over the years. And again, the concentration is slightly different. You can see it's Gauteng and Northwest. Next slide. So this is the graduate program that we run internally, SECIC. So we started with this program in 2016, in 2009 to be precise. But there, our intake was very small, 1 student, But over the period, we've assisted about 87 students. Some of them have gone to be employed. We're very proud of them. Some we've absorbed internally, they are working as, they're professionals that are delivering in their own right, and we're happy about this program because, we contribute, to the general South African employers. They can use our graduates as a pool, and we'll also tap into them, to augment our own, staffing requirements. Obviously, over, in the long term, we want to increase the number. Currently, we are constrained because of space and also budget. But yeah, when things turn around, well, we will be increasing the intake. Next slide. So this is very interesting slide because it reflects on the funds that we manage. So as a company, we run two streams of revenue. We've got the premium revenue, which we generate from underwriting activities, and then we've got investment income, which we generate from our investments. So we've got two pool of funds there. We've got 2.9 billion rand, which is the first pot that we use that facility or those funds to pay our expenses, salaries, taxes, that we have to pay in rents. And then we've got around $280 million. It used to be around 450 before we pay the claims, but now it has dipped because of the claim that we paid. So we're still sitting with about $280 million thereabout. And these funds are sitting with different fund managers. Some are offshore managers, like Allianz Global and T. Rowe Price. However, if you look at most of the managers that we've got, they all have level 1B scorecard. And we're doing a lot of fantastic things with them. We're also addressing the ESG issues in terms of the investment that they make. We have provided them with a list of exceptions, that they need to comply with. And every now and then there's engagements. They give us updates on their journey on implementing the ESG and how they're complying with that. But very interesting, we've got the bond portfolio. These Wandalozi and Prowess, they are managing almost about 500 million that we've allocated to both of them. They're managing those funds, for us. We adopted these companies, even though they came through the procurement process, but we've had to, to put specific requirements to get them on board. We assist them, with through our as supplier development program, with some of the needs that they have, like building their ICT infrastructure, enhancing their management capabilities. And so far, they've been doing very well. And, and I think it's one of the success stories that we're very proud of, because of the performance that they've been giving to us. And it's a program that really fits into our B aspirations, or our transformation agenda, at large. We want to see more Black, professionals. Prowess is led by a Black female. She's very fantastic. She started this business out of the scratch, and it's growing. Obviously, one day we want to see them being ranked among some of the biggest asset managers, and we should be very proud that we contributed to their journey, to success. Next slide. So here we just outline some of the challenges that we have in terms of reaching out to the provinces, but we have been doing quite a lot anyway, despite those limitations. And I think it's because ECIC has got only one office, which is in Centurion. We operate from there. We're just above 100, staff complement. That has worked very well, but obviously going forward, we'll have to look at our model and see, what is it that we need to do to have a stronger representation of geographic reach across all the 9 provinces. So we have been participating with the GTRC, on the AFC FTA awareness sessions, and that worked very well in 2023-24. Then again, the kind of business that we've been oriented to, the long-term business, it also lends us, to being concentrated in one area. But with the short-term insurance, obviously we'll have to get out of our comfort zone, and scout the country looking for exporters that we need to assist. And again, there is an opportunity to really filter into the province. And we've been doing that. I mean, here in the Western Cape, I'm in Cape Town now. There's a company that we assisted, that builds ships there, Damen Shipyard as well as RNC. That company was sold to some, European company, but we did assist them quite a lot. Then we also have the export passport program I think that will also give us the reach that we need. Again, collaborating with the DTSC, IDC, and any other. And then, our cover is historically on the continent. And, we have never covered transactions to the US at all. So that has never happened. Even with the current diplomatic row between the US, it doesn't really affect our business that much, except for the US EXIM involvement that I've highlighted there. But yeah, we do have ambitions to look at EU, China, and India, Saudi Arabia. It was very interesting. We had a discussion with the Japanese ECA, NEXI. They came to our office 2 weeks ago, and they were selling us this interesting program where they want to support Japanese companies in SA. And they're looking at different ways of collaborating with the SA, how we can do that. And the Saudis, EXIM, they did the same thing. We met them last week, and out of these discussions, you can see we can draw a lot of parallels and synergies, and I think the opportunity to explore there, and again, to also get the markers for export passport facility of 9 billion. Then some of the challenges that we've had, it's we need to partner with the likes of CGIC. CGIC controls 85% of the short insurance market. So they've got a huge database of South African exporters. But there are countries where they cannot operate. For example, Zimbabwe, they can't go in there because they do not have risk appetite because of the circumstances in that country. And I suppose Mozambique could be another country where they are off cover. But through our cover and partnership, we are able to engage with them and free that capacity for them to be able to use it. So these are some of the discussions that we're having with CGS in order to expand our short-term insurance business. We met with them last year in December, and they gave us a feedback 2 weeks ago. They're working on a proposal that will be taken to the board. They want a huge facility. And it's also addressed our challenges with the ICT system. They've got an established system that they've been using for years. It's a bespoke system that they built internally. So we have been scouting for a similar system for short-term because short-term business is driven by ICT. So in our digitization quest, we've ended up engaging with Sino-Shiva China. They've got their own system that they build in-house. Exia, they also have their own system that they build in-house. So we're learning a lot. Even the Indians, ECGC, they also went on their journey to build their own system. So we're going to take all the lessons learned out of this, and then as we embark on our journey, see what works and see what do not work here. So that is exciting time that's coming. Obviously, it is taking a bit of time, but I think we're going to get there. This will also enable us, to engage with different exporters across the country. Some of the opportunities, I'm not going to repeat these ones. We have covered the export passport facility, the euro. Can you go to the next slide? Yeah, some of the key challenges that we've had. Obviously, we do reject claims, but we have to reject claims on a very good, sound legal basis. We shouldn't do that willy-nilly. So there is a claim that we rejected, with one of the commercial banks. Obviously, there we received fraudulent financials, and the company was liquidated, and we found out that they were generating a different set of financials for different stakeholders, and in this case, it was very sad because the liquidator that was assisting in that case, he was killed together with his son immigrant, when he was working on the case. But that case is being investigated. One of the primary suspects, has passed away last year, December. The Ghana story, I think I've covered that, and the DM also did justice to that. Then in terms of international competition, obviously we do face a lot of competition. China is big on the continent, and they're just pushing finished goods products. They do not set manufacturing facilities. And it's something that they recognize because last year, during the BRICS in Russia, I had the opportunity of sitting with the head of Sino-Sure. And in those discussions, he came out very clear, admitting that as China, they need to do more, They need to see some of the manufacturing capabilities to the continent, especially because they're the biggest takers of our minerals, So it doesn't make sense that they like our minerals, but they cannot put or create, regional supply chains on the continent, using, those minerals, processing them, setting up, storage facilities. I mean, between us and Zimbabwe, we control the PG market, So that's quite a big resource for the two countries, which is very key in EV technology, advances. So it's something that we need to look at and say, how can we leverage that? Next slide. Then Alpha 17, I think the DM touched on the challenges, but let me not delve into this. I will leave this to the CFO, Nolutalo, to take you through some of the key challenges that we've had. It does lead into a number of challenges, the standard, even though, we have to comply with it. But yeah, if you were to ask me personally, I would have said, hey, the better we stay away from this, we're gonna be in a good place. But yeah, unfortunately, it's a standard that we need to comply with. So it does present balance sheet challenges to us, especially when it comes to salvages and taxation and the leakages that are there. And then the other key issue is around the acquisition costs. We never used to allocate our costs, to different policies that we underwrite, whether they've been underwritten or they've fallen by the wayside. But now the standard forces us to look at all the costs, irrespective of whether the deal was underwritten or not. And they have to be allocated to deals that become successful or onboarded. So I will leave this to the CFO to really take you through some of the granular aspect of the challenges that we're experiencing. Next slide, please. So just looking at what are the key challenges that we face globally, obviously the climate change issue has been cited as the biggest risk, even though there's contestations, there are different school of thoughts, it depends on where you're sitting. I guess if you are in America under the Trump administration, your view of climate change will be very different. However, a lot of countries, from the developing, economies, we are supportive of climate change and the Paris Agreement and the steps that we need to achieve, in order to make sure that we achieve net zero. We support projects that are sustainably, that can support on a sustainable basis, thinking about the communities, thinking about the environment, and I think it's a journey that we've made a choice as a country to travel. Then we talk about the geopolitical tensions. These have escalated quite a lot in the last 3 years. I think we've seen the Ukraine-Russia war, how it disrupted supply chains, And then we also have the divisive issue. I guess that is the source of the problems that we have with Trump. The Middle East, the Palestine-Israeli issue. And I think that resonates with us very well. And so we did what we did, by taking the Israelis to the International Criminal Court of Justice. Then the slow global economic recovery, yeah, it hasn't been easy, Even when we talk with other ECAs, at Benin Union, they are experiencing a lot of challenges. In fact, some of them were honest to tell us, what you see as grants, donations to Ukraine, it's export credit transactions. They are supporting arms. They are supporting the war in Ukraine. Then the Trump effect, I'm not going to dwell too much on that one. And the AGOA renewal, issue, I think these have been widely reported. And the moderate monetary policy, even though there are signs that inflation has been slowing down, But we have not seen the same rate in terms of the lowering of the interest rates, even globally. And that puts a strain on the availability of liquidity, because when the interests are high, the cost of funding becomes very high. However, there are opportunities that we see. The rebounding of the commodity prices and falling oil prices. The PGM prices were down, but we're seeing a rebound. Gold is doing very well, in the current circumstances. As I've said, inflation rate has shown signs of falling. We also have the opportunity of the expanded BRICS. There are new countries that have joined. Most of them, or the majority of them, have not been traditional trading partners of SA. So we can clearly look at that and see how we can, explore those opportunities. Again, the de-dollarization and the alternative currency settlement system to rival SWIFT. Look, this has been a talking point, but I guess now, if you make the loudest noise, you'll be facing tariffs, a threat from the US. So it's a heavily politicized, but we'll see how far it goes. Next slide. Then on the continent, there are hotspots areas, of instability and conflicts ranging. Sudan has been the case, even though there's been some intervention, I think, from the US to force the Sudanese military and the other warring party, I think it's Arab force, to really reach a settlement. We've got a project in Sudan that we did many years ago, and every time when I look at the technology, it's always humbling, when you look at, all those motors and pumps, that are driving that water treatment plant on the Nile, in Durman. It's providing potable water, its water is gold in that part of the world. And that plant has been operating irrespective of the civil war that has been ongoing. We keep on engaging, with Bywater, who's managing it. And, the military is providing the chemicals to treat the water. Obviously, when the dust is settled, we'll continue to engage with the regime that will be in place to see if we can restructure that project. They have been repaying us in drifts and drafts, but since the civil war, they stopped. We have settled that claim, to IDC about $20 million some years back. Then in Mozambique, the issues around the insurgency have been reported. I guess what came as a surprise to us was the post-election violence, because that's something that we never anticipated. And it caught us by surprise that, you've got a very vociferous, opposition party leader that has got a huge following, and he can direct his followers any way he wants, to cause mayhem. But I guess it's not in the interest of Mozambique, and an unstable Mozambique is not in the interest of SA. And there are many reasons that can be said, but yeah, we do need that country to be stable. It does come to us as a source of our energy resource. We are looking at Mozambique to supply energy. In a similar vein, we look at Lesotho to support us with water, from the mountains. So I think that is the importance. And I really commend the efforts by the SA government, to bring about peace, in Mozambique. The DRC is also one of the countries. We've got a project there that was supposed to be closed. So when the war in the East started gaining momentum, so that has threatened, our ability to close off on that transaction. So we've been having discussions, to see what is the best way of dealing with that. Yeah, but again, we do need a stable, DRC. Then the other issues relate to sovereign debts. I think we've touched on those. Ghana, Zambia, Egypt, and Zimbabwe. They are all going. Ghana and Zambia have gone through. Egypt has been going through a debt restructuring. Zimbabwe has just entered this last year, and we've got a number of projects. But I'm quite excited about Zimboras, because that project does not rely on the fiscus. The revenues, the fees that are paid at the border post have been ring-fenced, they're dedicated towards debt service. And in fact, we've seen some of the loans being retired, especially the sponsors shareholder loans. And then we've also seen a prepayment of the debt last year. So it's one of those examples that even if a country has got big challenges, if you can restructure, if you can structure and ring-fence the revenue, you can have a successful project that delivers key infrastructure, in terms of the border post that allows for goods, and for both movement of goods and people. And again, the majority of those goods is South African imports that are going into Zimbabwe. Then the issue around the AFCTA, look, this needs a whole lot of energy, to realize. I guess some of the challenges that we're seeing now, those sporadic, areas of conflicts, they do impact progress in terms of getting the AFCTA objectives realized. I've spoken about the Chinese halo effect, high cost of borrowing, some of the projects.
Sorry for interrupting.
Yeah.
Could I please ask that you just speed it up a bit, because we are going to run out of time if the CFO also still has to do his presentation.
Okay.
Thank you.
Thanks for that, Chair. I'll certainly. I think we can skip these slides. We have spoken about some of these opportunities. South African, I'm not going to repeat. I think those are well known. Let's go to the next slide. So my part of the presentation ends here. I'll hand over to our Warren Kuhn to take us through the strategic objectives. And Warren, again, in the interest of time, you can just highlight the material issues. Thank you, Chair.
Thank you, Chair, members. So ECIC has 9 strategic objectives with 15 targets in them. Obviously, they're based on government's priorities. And we have also mentioned that Africa is our marketplace, so the AFCFTA also plays an important role. This is just the stakeholder strategy map that shows the 9 objectives. In terms of the specific targets, Chair, we have split the targets into the DTIC's joint KPIs. So we've got industrialization and growing the economy, which are our most important targets. Here we've got $570 million as a target for value of approved transactions. And with that 570, we also have a number of approved transactions of 4. So there is not just one big transaction that we look for in the year. And number 3 being the value of approved transactions with the expanded sectoral coverage. That is the short-term transaction that was approved by the previous minister. There we have a target of $80 million. The export passport program has been touched on quite a bit. For this year, we've got a target of 7 beneficiaries. We do have an opening awareness webinar happening next week for the identified beneficiaries. So we do expect to have at least 7 of that. Each year we target the BBB level 1. And then under building a capable state, we've got our employee value proposition, which is also to retain at least 85% of staff every year. We're also looking to automate business processes. So we've got a multi-year business process automation plan, and we're targeting to be at 90% of that plan by the end of March. Also improve staff efficiency, where we have a ratio of our employee cost against our average revenue, targeting to be below 31% every year. Also, as part of our vision mission, we highlighted the importance of our risk management practices. So we have a ECIC risk appetite limits, which we target not to have any breaches, and this has been since 1 April 2022. We also have an internal survey where we look at the risk maturity of the corporation. And this has been an increasing target over the past 3 years. With this year, we're looking to have level 3 being the highest level across at least 75% of the metrics of that survey. Enhancing financial sustainability, we look to have at least an increase of 5% in our equity, and operating costs from our underwriting activities are below a targeted amount each year. For this year, it says 164. This target increases by maximum 4% every year. And our last two objectives, we have stakeholder and customer engagement. We do have an AFCFTA media campaign, which is currently running. So we have a click-through rate on that, which tracks the interest of companies in South Africa and in the targeted African countries. And we also have an internal employee engagement survey. That 70% is an industry norm of a high achievement. So we're targeting that for this current year. We do this survey every 2 years, and then another survey we do in between those is our culture entropy survey. And then we also target a clean audit every year with also these additional requirements: no repeat findings, no more than 3 new findings. And this also doesn't include judgment differences. We have touched on IFRS 17, which resulted in us having an unqualified audit for 23-24 instead of a clean audit. That is only the second time in our history that we haven't had a clean audit. Then also to highlight how we fit in with the desired impacts. Within this, there's the export targets of 55 billion rand. So we contribute directly to that target. That's the 670 million that we're targeting is the 570 and the 80 million I highlighted earlier. So if we achieve those two targets, we expect that to result in 30 billion rand in exports over the next 5 years. As we approve transactions, those transactions usually take an average of 5 to 7 years to get to the maximum of the loan or full drawdown. And then also based on our economic impact assessment, should we achieve that 670 million target, that would also result in 70,000 job opportunities over the next 5 years. The acting CEO has touched on the projects that we are expecting to reach conclusion or start drawing soon, being Moz LNG, Yellow Equipment, and NMSI hospitals in Zimbabwe. He also touched on the ExxonMobil, which is also a Moz LNG project. Then this just highlights the insurance portfolio that we have and how it would decrease over the years. So as we highlighted, we were formed in 2001, and we were doing multiple year, long-term, medium to long-term transactions, and those transactions are now coming off the book, and you'll see the red line goes through to about $120 million. But the green line shows the projects that we have in our pipeline, and we're expecting, if those all come through, that we will increase to about $1.5 billion. Chair, that's it on the strategic objective section. The next section is the CFO on the budget for 24-25.
Okay, thank you. You have until 12 o'clock.
Tando?
Good morning, members. Can you please confirm whether you are?
Yes, thank you.
Okay, thank you. As mentioned by the previous speakers, there were changes in our accounting standards in terms of how we account for our insurance reserves. where the new standard became effective for the ECIC in the 2024 financial year. And then for the industry as a whole, it started with the entities that had a year end of December 2023. So the main changes between the new accounting standard and the old one was firstly with regards to the cash flows, how we account for the cash flows. So in terms of the new standard, we now incorporate both the cash inflows, which will be coming from the premiums, and in an event where we've paid a claim will be the salvages. And we also incorporate our outflows, which will be the potential claims and the expenses. So it meant that when one is now looking at our balance sheet, we now reflect our figures on a net basis rather than in gross, where we will show the assets separate from the liabilities. So that will now introduce fluctuations, because now as we receive the premiums or the salvages, it now means that those cash flows will now be stripped from the liability, and then those will be now shown separately in terms of our assets. And as the ACO has mentioned, we now are expected to account for the cash flows for the entire duration of our projects. So it now forces us then to present value our liabilities, and with present valuing it brings about additional risks which relates to discount curve, because now if the curve increases, then it now means that there is an additional expense that we will be recording on our profit and loss, and vice versa when the curve reduces. And this is particularly for the Ghana claims, because those claims, as previously mentioned, the salvages thereof, we will be receiving those 2039 and beyond. And the other change, which also had an impact in terms of the reasons why we finalized our financials late last year, it is with regards to how we account for our expenses, where previously all our expenses were recorded in the year those were incurred in, and they were all accounted as operating expenses. But now with the change, it now means that we now need to allocate a portion, the acquisition cost. We now need to capitalize those and only record and allocate them to the project when that project becomes effective. And also the remaining expenses, we now also need to split those between unallocated expenses and those that have been allocated to our projects, and those ones will now be including that as part of our insurance service expenses. So with regards to those costs that have been capitalized, so for example, with the Moss LNG, we have capitalized quite a lot of our operating expenses there, because the bulk of the work has been done on that project, and also taking into account the quantum of the project itself. So the risk that is now introduced by this new accounting standard is that we, even for the projects that are in pipeline, we are expected to capitalize those expenses. And now the risk becomes, in an event where that project falls off our pipeline, if the remaining projects that are in our pipeline are not sufficient to cater for those additional costs, then it means we will need to record or recognize those expenses directly in our equity. So so meaning that if we have been capitalizing costs for the past 5 years, so those costs will now be recorded in 1 year in our equity. But the main thing to note here is that with the standard, in as far as the delays that were caused with us not finalizing our financials on time, as the DM has mentioned, is that the standard is fairly new and it is principle based, so there is not much of market market best practice that is currently available. And added to that, with ECIC's unique business model, it now resulted in different views between how we see these costs to be accounted for, to how the view that the auditors have had. But I'm happy to know that we have established principles that we have agreed on, and we are not expecting to see these differences or to have an impact on our audit going forward. So as the ACO has mentioned, particularly with Ghana, it introduces challenges to the organization as we try to run the organization sustainably, because since these salvages are receivable way into the future, for tax purposes, we account for the tax relating to those salvages the minute we recognize those salvages. So in a way, the tax consequences account for income that has not yet been received now. And given that that income is way into the future, then the possibility of those salvages being restructured in future, it becomes higher and higher. So now it means that between now and later on, there will be additional adjustments that might be required year after year as a situation changes with regards to those salvages. And as I've indicated, because we are now present valuing our obligations, our reserves, it will also introduce that fluctuations in terms of our numbers. So just to give the committee an idea of what the impact of these changes that I'm talking about. So in the 2023 financial year, when we were still under IFRS 4, we had reported a loss for the year of 1.5 billion. And that was as a result of raising claims provisions for the projects that are in Ghana. But then with now moving on to the new accounting standard, which is applied retrospectively, so it meant that we needed to go back and adjust our numbers and report as if we had been reporting under IFRS 17 from inception. It meant that loss that was reported initially of 1.5 was now reduced to 814. So mainly because now in the new standard, we were now accounting for those additional salvages that we were not previously accounting for, because under IFRS 4, we only limited the salvages to those that will be receivable in the next 12 months. But then in 2024, because now in 23 we had accounted for salvages and which are based on estimates and they go for a longer period, the changes happened in 2023 in the market, which now resulted in us adjusting those estimates that we had made in as far as the salvages were concerned, and also accounting for the additional claim for the Ghana. It now meant that in the 2024 financial year, we recognized another loss of 502 million, mainly because of the changes that were made on the salvages. So in a way, what has happened is that the loss that was previously raised in the 2023 financial year of 1.5 was now split into 2 financial years, which is the 800 in 2023 and the 500 in 2024. So I will now move to the actual figures, which is the target at hand. So as the ACO has mentioned, there is a number of projects that are on our pipeline. However, and some of those we are expecting to get huge premiums from those. For example, there's 89 million US dollar that is expected from Moss LNG. There's another 38 million US dollars that we expect from ExxonMobil, and there's another 74 million that we are expecting from Quantum. But those numbers, they will not reflect on the revenue side, mainly because of how we are now accounting for the premiums. But those will reflect when we cover the cash flow statement, where you will see those big spikes in our cash generated from our underwriters. So all in all, Chair, you will note that in terms of our insurance services result, we are expecting to our income to increase as we underwrite more business, where in the 2026 financial year, we are expecting 149 million increases to 282. So just indicate this is after we have also accounted for expected claim movements that we that are from part of the insurance services calculation. So you will note that in the 2025 financial year, it's sort of an outlier where we are recording 355, and that is mainly due to the one of the two of the projects that we had raised an IBNR for, where we were expecting that we will be releasing that IBNR in the current financial year. However, there's been changes due to how the developments are happening, where we foresee us now releasing that claim in the 2026 financial year. So the other movement is a significant movement that is happening is in terms of our insurance, net insurance services, expenses and income, where we foresee in the 2025 financial year that the discount curve will reduce, which will result in our salvages that we are expecting from Ghana, and also our positive our assets in as far as our insurance context to generate additional income, which is 107 million in the 2023 financial year. But then in the outer years, those movements are as per the changes that we are expecting to happen in the discount curve. So as I've indicated, because of the discounting of our cash flows, it results in those additional fluctuations, where, for example, in 2025, we are expecting a reduction in the discount curve as we are generating an income. But then when you look from 2027 financial year, the expectation there is that the discount curve will increase. Hence, now we see these additional expenses that are coming through. And then the other thing to note is that in terms of our insurance, our investment income, as the ACO has mentioned, we have two forms of revenue from our insurance and from our investments. So on the investment side, the returns that we are using there, those are long to medium term returns. And then in the 2025 financial year, it's high when relative to the other years, mainly because it also incorporates the actuals for 6 months, and during that period we had a higher allocation to our global bonds, which resulted in additional income. And then the other thing to note, Chair, is that as an organization, the bulk of our projects are in US dollars. So as we prepare these financial statements, we prepare them on a US dollar basis, but then we present them in rands. It therefore means, because now we have 2 sets of portfolios, as the ACO has mentioned, we have the rands, the investment portfolio that is in rands and also is in US dollar. So this foreign exchange movement that you see in the 2025 financial year, that is coming from our rand portfolio, where it was assumed that the rand will appreciate against the US dollar when you compare the figures in March 2024 versus March 2025. So all in all, Chair, we are expecting that from the current financial year up until 2030, we will be generating positive returns in terms of our income statement. And as I've mentioned, for the 2025 financial year, the main contributors there are our income, the forex, and the additional income that we will be generating from our investments. You can move to the next slide.
I'll have to ask you to speed up, please, because we've gone over 12 o'clock now.
Thank you, Chair. On this slide, Chair, I would just like the committee to note that for the entire duration, we are expecting to be solvent where our assets exceed our liabilities, and we expect our equity to increase from 9.2 billion all the way to 13 billion. And then the number that you see there for the insurance services of 1.5 billion rand, that is the salvages, the present value of the salvages that we are expecting from Ghana. And then the major account is the investments, where we expect that to increase as we underwrite more business, and we also invest the premiums thereof. We can move to the next slide. And then on this slide, Chair, the main way here is that we continue to run ECIC on a self-sustainable basis, where we are able to pay our claims or expenses or any other obligation as they become due. And then you will note that in the 2025 financial, in the 2026 in the financial year, there is that big jump, and that big jump is as a result of those premiums that I was talking about, where I was indicating that we are expecting some big premiums, and the assumption here, Chair, is that we will be receiving those premiums upfront. But all in all, the main thing to note here is that we do run the organization sustainably, and as we generate those cash flows, we invest them to generate more returns for us, Chair. Thank you.
Thank you very much. Sorry for putting pressure on you to present this to us. Colleagues, we have now received a brilliant presentation, and the floor is now open for questions. Marty, if you can just assist to see whose hands are going up. Okay, I see Honourable van den Berg. I see Honorable Satoli. Okay, it would appear as if it's only
Chair,
those.
it's Macy Kennedy. I can't raise my hand, but I want to speak.
Okay, Macy, Honorable Kennedy, I
Thank you.
see you. You will follow Honorable Satoli. Yes?
Thank you.
Honorable Machobeni, Chair.
Okay, all right. Can I start with Honorable van den Berg?
Yes, thank you, Chair. I have put together a couple of questions. The first one is, when moving away from the Paris Club arrangement, what is going to be the proposed alternative? The ECIC is now covering euro-denominated transactions, but what about the BRICS partners trading in rubles, yen, rupees? Why is the ECIC then not active on the BRICS front? And as it has been heralded as the new future. A third question is, we need clarity as to where the ECIC wants to move and position its focus as to taking the South African economy forward. Then, is it possible for bad players to misuse the ECIC, and how can you mitigate it? Does the strict auditing process follow?
Sorry, Honorable van den Berg. Honorable Mabilu,
yes.
please mute yourself. You may continue.
Thank you. Is it possible for bad players to misuse the ECIC, and how can you mitigate it? Does the strict auditing process followed in the insurance sector also count towards the ECIC? Thus, are they bound to the same regulations? And what measures are you taking to curb mismanagement in order to achieve a clean audit? Then a question to Mr. Mapula on page 8, sub-point, buyer's credit. Why did you say that you will only be helping black SMMEs? Is this legislated, and what law or regulation is involved in this decision? Are you also helping white or colored persons and SMMEs to utilize buyer's credit? I would also like to know, is the ECIC participating in financial education of potential small importers or even exporters to make buyer's credit more available? And where can this information be accessed apart from their internal training programs and bursaries? Then on page 13 of the presentation, the graph shows that the ECIC is impacting less and less in terms of revenue into South Africa. Could this be due to the exclusionary nature in terms of countries involved in your portfolio on page 14 of the presentation? Our two greatest trading partners in South Africa is China and America. Why does this not reflect in your portfolio? It seems that the ECIC is involved with only higher risk transactions. Surely some interaction with our main partners could be expected. And then, if not, are we then at least receiving premiums that relate to high risk? I'm nearly done. 3 more. Is diversification into euro, dollar, and other currencies even relevant? I think I did also ask it previously. Then from page 31 on the presentation pertaining to the challenges and opportunities, I see a gentle shift also recognizing for major international and global influences, and not only a focus on Africa trading, which is of a higher risk. Is this indeed the case? Then I would also ask for clarification into why the ECIC sees the GNU government as a challenge and not an opportunity, and therefore what is the loyalty of the ECIC to the GNU government and its changing policies? Thank you very much.
Honorable Satoli.
Okay, thank you very much, Chairperson and Good afternoon to honorable members and DM. My question is that what is the governance structure of the ECIC? Does it have a board? If so, who appoints the board? If not, how is the executive and management constituted? Now, the other one is, what is the IFRS 17? Why is it difficult to be implemented or to implement? Now, there is this one that I've read that President Donald Trump, I know that he was elected last year, November, and took office on the 23rd of January, 2025. And when you talk about the Trump effect and the AGOA effect, can you elaborate, please? Thank you very much.
Honorable Kennedy.
Thank you, Chair. It's Macy Kennedy speaking from Limpopo, representing the EFF. Thank you for the presentation. One of the presenters mentioned that you ran the business in a sustainable manner, but sometimes business run into a risk. The question is, taking into consideration your experience of profit and loss, what hardships have you experienced and learned from the past insurance claims and losses? And secondly, is there any evaluation of asset to be insured that you go through before processing the insurance of the entities which are to be insured? That is all. Thank you.
Sorry, I missed the next speaker's name. If you are
Honorable
available. Sorry?
It's Honorable Machobeni, Chair.
Okay, thanks, Honorable Mtombeni. You may go ahead.
Okay, thanks, Chair. Greetings to you, greetings to the colleagues and the department at large. The two latter speakers did cover me concerning, so where's this? Concerning why it's not active, ECIC, and also doesn't have a board, ECIC. And also another one, I just want to know, you've mentioned the key risks that are covered by this insurance. What about climate change? Because climate change is a very critical issue in our continent. And also, I would love if all these that you've mentioned here, like risks, violence, etc., must appear in the contract. My fear is that when something happened, it will not be fixed. But when the company goes to a contract, they will state that they can't pay you because it's not part of your contract. Sometimes these companies are not doing justice to their customers. When something went wrong, they will refer you in paper, whereas it will not appear. And also, our areas, you've mentioned provinces that are working with you. I didn't have other provinces except you've mentioned Cape Town. And also you've mentioned the issue of students. You are only, I have a problem here, eyes. That is why that I'm breaking. I forget my spectacles. You've mentioned ESUS students. You are only helping Stellenbosch students. Our areas are not getting the opportunities. Only students from Stellenbosch who get offer from you. What about other institutions? You just focus on institution of East Stellenbosch or others. Their turn is coming. I'm just having a consent on that. I must end there, Chairperson, because my questions are mixed up. Thank you very much.
Thank you very much, Honourable Ntombeni. I have many, many questions, but I want to thank you for a comprehensive report. Sorry about that. Questions to the ECIC. Honourable Ntombeni touched on the graduate and bursary programs, and ECIC has invested in these bursaries and graduate programs. But it would appear as if only a fraction of students have secured employment. Could you share with us what strategies are in place to ensure these initiatives eventually translate into real jobs? Then, with the multiple sovereign defaults in Africa, you mentioned Ghana, Zambia, and Zimbabwe. Could you please explain how ECIC plans to reduce exposure to high-risk governments while still funding its trade facilitation mandate? And then with regard to the foreign currency risk, with the recent approval to cover euro-dominated transactions, what measures are in place to hedge against foreign exchange risks and ensure financial sustainability? Then with regard to your financial performance, your budget shows strong revenue growth, but liabilities are also increasing. I'd like to know what strategies are being implemented to maintain profitability while expanding insurance coverage. Then I'd like to ask a question with regard to your Enabling Act. In the presentation, I don't pick up anything specifically where you specify exactly when the review process started. So I'd like to know when the review of the ECIC's Enabling Act formally began and what is the expected timeline for its completion. And if you could share with the committee what the key amendments are that are being considered and how these will enhance ECIC's ability to fulfill its mandate. And then, has there been stakeholder consultation, and what are the major concerns raised by industry players regarding this review? Let's just see. You mentioned an insured client who has a rejected claim. I know I cannot ask who the insured client is, but is there a possibility that we could request a summary of the case and its financial implications? And then again to the ECIC, how does the current monetary policy environment affect your ability to finance export transactions? And then with high interest rates in some markets, how are you managing the risk of exporter defaults? Then I'd also like to know what strategies you have in place to hedge against foreign exchange risks associated with euro-denominated insurance. And then how will you adjust your underwriting of policies if borrowing costs remain high for exporters? And how do you plan to maintain investment income amid moderate or fluctuating global interest rates? Now, the CFO spoke to us about the new accounting standards. I'd like to know how the IFRS 17 affected your financial reporting and capital position, what adjustments you've had to make to comply with IFRS 17, and how they have impacted underwriting capacity. Then, how's ECIC managing the financial strain caused by the requirement to recognize future recoveries upfront? And then, have you engaged with National Treasury or DTIC to mitigate the IFRS 17's impact on its balance sheet? And then how do you plan to maintain a strong financial position while ensuring compliance with these new accounting standards? I just want to see. No, that seems to be it. I still have many other questions, but I will put those in writing. Over to ECIC for responses, and then after that I will give over to the Minister for closing remarks. And once that is done, Minister DM, you are and your entity are excused, but as I said in the beginning, you're more than welcome to remain on the platform. Thank you.
Okay. Thank you, Chair. So I'll tackle the questions in the manner they were presented. So I'll start with the Honorable Van der Berg's questions. You know, what is the alternative to the Paris Club? Are we intending to move away or not? So at the moment, we do not have a choice to move away from the Paris Club. You know, what we are trying to discuss with the likes of Afreximbank, you know, I think they have a huge interest in protecting their preferred creditor status so that they don't have to belong to the Paris Club. So we're anticipating that those discussions, if we were to have them in earnest, you know, we'll be looking at how can we form a bloc, you know, that represents, you know, African creditors in the creditors committee. And obviously that strategy will also look at how do we preserve our interests, you know, in those discussions, you know. And I guess for us, you know, it will be a chicken and egg situation because most of the highly indebted countries that we've seen at the Paris Club is African countries, you know. So I guess there's a discussion that we will need to have to see, you know, before we get to the Paris Club, is there any way, you know, financing entities on the continent can try and, you know, and address the, you know, and address the indebtedness of the country, maybe by extending the tenures of the loans, you know, or maybe restructuring those loans, you know, before the country defaults. So that is the discussion that we normally have in a private sector project, you know. But I guess the problem that we have with sovereign lending is that, you know, once the country defaults, you know, there's no way to go back. You know, it triggers, you know, cross defaults on a whole range of the debt facilities that we'll be having across the board. So I'm looking forward to having that discussion and to see what will be the, you know, best or optimal solution. But in the main, you know, I don't see us walking away from the Paris Club. You know, the Paris Club has been there for a very good reason. I guess the issue will be how do we coordinate our efforts to maximize our impact in terms of preserving our rights or highlighting the concerns that we might have. Then you spoke about BRICS and alternative currency support and everything. Obviously, that discussion is it's ongoing. You know, there's been a number of countries that have ditched the dollar. I guess when you look at it from a de-dollarization movement, you know, it takes another angle. But I think if it would, the way it has been positioned to consider more currencies, you know, local currencies that can be utilized for trade, I think, yes, there could be an opportunity. But that will also involve having a payment system that the countries can sign up to. So I see that discussion, it will take some time because, it's not only, it involves a whole lot of stakeholders, Reserve Bank or Treasury, they will have to ratify that system and see if that system works or not. And so far, we've had reports that countries are trading on a bilateral basis. But I guess when you're dealing with a community of countries, yeah, you will need a universal system, that takes into account all the currency that will be agreed upon. If it happens, I think it will be a good opportunity because, the more you trade on your local currencies, I think you can have a big reach in terms of the trades that we can support or settle. That's what I think will happen. But yeah, it's still a journey that we need to see how it evolves, assess the risks, and see what the impact it could have. It's not an easy thing to say tomorrow you're gonna wake up and be looking at alternative currencies. I guess we've been used to the current arrangements for far too long. But it's not far-fetched. I mean, EU introduced euro in 2000, and they've been trading. It's one of the widely utilized currency, even on the continent. And there are some of the countries that are all producing, that are settling trades in euros. It's working. So I guess there are lessons learned. Obviously, when that discussions, takes, climax, obviously, we can see what the alternatives will be and how the whole system will work on a broader basis. And then how do we move, SA economy forward? And in the process also prevent the misuse of ECSE cover. I think you've raised very fundamental questions there. Our coverage is very important in facilitating our exports. I don't think it's there to be misused. Obviously, what is important in moving, SA economy, there are a number of interventions, strategy. We've got an industrial strategy that puts, as its apex, priority, export-led, and I think it's key, export-led strategy that hinges on exports. So we have to generate a lot of goods, tradable goods that can be exported. And obviously that talks to our competitiveness as a country. What are the key things that we're very good at, we can produce, we can dominate, look at agriculture as a whole, the wine production that we do, automotive parts, all sorts of things that come to the thing. Steel production is also very key, as I've said. But in that process, SCSA, the underwriting activities that we do, they contribute largely towards moving SA economy forward. So we definitely have to deepen our impact, cover wide transactions that will give opportunities for SA exports. I mean, if you look at a transaction like Mozambique, you're talking about a whole host of South African exports. I mean, the companies that are involved there are more than 50 or 100, and that provided different range of services and goods. So in some of these big industrial projects that will give us, an opportunity to really move the country forward. Obviously, one of the things that we need to recognize is that our construction industry, which has been the bedrock on which we built our portfolio over the years, has gone through some challenges. A lot of the top 10 tier SA construction companies have had challenges. If they haven't reduced, they've moved to other activities such as mining, contracting, some are facing business rescue and all of that. But we see some of these, big international companies still interested in the value chains that we have. There are companies that can still support some of these projects. Obviously, over time, we'll build competitiveness. The gas projects are dominating the continent. You go to Namibia, you get a gas project. Even in South Africa, we are building, gas terminals, regasification terminals or infrastructure. So this is a new competitive area that we need to harness the skills and be able to offer that skill, throughout. And I'm hoping that over time, we'll see things improving. For when it comes to misusing of the ECIC cover, yes, it's not an easy thing to misuse our cover because we do our due diligence. We assess these transactions for the risks that are embedded in there. We make sure that those risks are mitigated. Obviously, there's one risk or two that you cannot fully mitigate, which is market risk. If you're covering a commodity project, maybe it's diamond or gold, or even copper or any other base metal. So those are exposed to the vagaries of demand and supply issues. And we know if China's economy turns down, there is no appetite for demand. That is felt across the commodity sector at large. So it is those kind of shocks that happen. But obviously we do put mitigations, but they're not absolute proof. You can put hedges, you can put tight offtake agreements. But yeah, there are those other elements that you can put whatever strategy, but it's not easy to say it's 100% foolproof. But we do our best so that our cover does not get utilized for thing or another. And even in terms of underwriting, we make sure that we're dealing with the sponsors or the owners of the project that we know. Obviously, as I've said, the other project that we rejected the claim of, where we've given, wrong financials. And it was through the weddings that we've gotten the policy documents that protect us against those. So those are some of the things that we look at. So when we look at projects, we also have to look at how do we cover ourselves in the policy that we issue, in terms of, highlighting certain key issues as exclusions, if we feel they're risky, it's not manageable, so those are some of the things that we put in to make sure that we've got a watertight case, we issue a policy that is defendable if we do face the downside, for example, where we have to reject a claim. So we have to do that with a very good basis. Then in terms of the support, for buyer's credit, I think you said whether is our intention to support Black industrialists and SMMEs, excluding other races. That's not the case. So you do have the BIs, you do have the SMMEs in large. So we will support everyone, irrespective of race, color, creed, we do not have a racial policy or bias. Just that there's emphasis on Black, economic empowerment as a policy of the country. So we have to support, Black industrialists. But we do not exclude anyone on that basis. So everyone, in fact, very interesting. The majority of the companies that we get, it's SMEs, guys that are really doing very well on their own right, and they can render services, and compete with some of the best companies in the world. So obviously, in terms of getting buyer's credit, because we work very closely with the banks, we do not provide funding directly. So we rely on the generosity of South African banks to support our program. So we do have a regular engagements. We also make sure that they do not give us the worst transactions that they know they wouldn't do them without ECIC. So those are some of the levers that we put in place to make sure that we underwrite transactions that can stand the test of time, transactions that are very solid, and assist us in achieving our mandate. Then the next question was on the revenue reduction and whether this reduction can be, stymied in some way. Look, we have paid a lot of claims, no doubt. I mean, this is the first time that ECIC has paid huge claims. And one of the lessons learned is the vulnerability to multiple claims. We is an environment that we've never been exposed to. I mean, previously we used to settle one claim after 5 years, and then you get another one after 5 years, but that didn't mean that we dropped our guard, We were very, very much alive to the fact that we couldn't get a big claim. And we've made sure that we've got sufficient reserves, capital to support those claims. And we've done that without any need to go into, to go to Treasury or bother the DTIC with whether we need to be recapitalized or not. Then interaction with China and USA. Why have we not covered trades? Why are we not taking advantages of those opportunities? Obviously, it's a very interesting dynamic, especially with China. China is all over the continent. They are the biggest funder of sovereign projects, but they provide capital. They also provide labor. They are not outsourcing some of these to other, countries or companies, that they can utilize, especially on the continent and especially in South Africa, And the case in point, you can look at our, solar energy, manufacturing, battery supply. Most of that comes to China. Is there a reason not for China to allocate some of that manufacturing capacity to SA, so that we can assist them with rolling, those products in the continent? There's a good opportunity there. So, but I guess they also have other priorities. They're also preserving it for their exporters, and they fund those trades directly. Similar with USA is very selective, I mean, in Ghana, when we went to Ghana to support some of the IPP projects, USA was there funding the distribution part of the electricity value chain, and they wanted that whole section to be privatized, and they were giving, dollar funding for that program. But they've never been involved in any of the IPPs. And obviously, because probably they analyzed the entire sector and realized that it's not something that they've got interest in, but they've got interest in where it makes the most impact, which is at the distribution level. So we have been trying our best to say, can we collaborate, with them, on some of the projects? Myself, I spoke to the previous vice president of US Exim on a number of occasions, and we do engage with them on Mosel LNG, and they are funding, quite big amounts, 5 billion. We cannot even compete with them on that. So they're very selective in terms of where they put their money in. For example, they've been bankrolling the Lubido corridor, with some of the European entities and China. And we do have some South African companies that are involved. But in our case, because there isn't content, we've been struggling. We have had pre-qualified 2 companies, Global Railways, and the other one was Motor Angel, but they're being funded by the money that's flowing from the US because they've got an interest in evacuating our minerals there, through the Libido corridor. So those could be some of the challenges that we have. But traditionally, in my memory, since I've been at TCIC, there was only one project that we did, and with the province in China. It was a supply for waste treatment plant, which was delivered. It was stuck at the bay, but the Chinese insisted on getting the drawings, and apparently they did that because they wanted to steal the technology. And for some reason they succeeded because they got the drawings, and then they decided they don't want the plant. They went and produced a similar plant, We had to pay a claim at the time. It was around 2004-5 there, and we settled. The equipment was stuck at the port. It had to be repatriated back to SA. So those are some of the challenges that you get with the Chinese. Then are we being compensated for the high risk that we're taking, on the continent? Obviously, most of your high risk countries, they reside on the continent. You find them on the continent. And we try to be competitive, in our pricing. And I think to a large extent, mostly we're being compensated for the risk that we're taking. I mean, if you look at some of the countries, the ECACR, they've got their own perception about the continent, They tend to exaggerate some of the events on the continent, And it's a view. Until you get into the country, you start experiencing, a different view, because you are interacting, you can see what's happening there. So those have been some of the anomalies, you know. For example, I remember if Zimbabwe has got a problem, you know, at the beginning, they used to think the whole of SADC, is affected. You hear people asking, hey, how are you living with Zimbabwe being in turmoil? Are you guys suffering? Obviously, we'll feel the impact, but it doesn't mean there's a contagion effect, across the whole region, and then we're experiencing the same thing. But yes, in terms of the risk, yeah, I think we do price competitively. In some cases, it also become very expensive, depending on the nature of the project. But yes, we'd not try and price ourselves out of the market. We do a sense check. We look at what the other ECS do is and how they're pricing. Then
I'm
we sort
sorry
of-
to interrupt again, Mr. Mapula.
Yeah.
We are really running out of time. Could I possibly ask that the questions that were posed to you, that they be answered in writing through our secretariat within 7 days? I think that would just assist us.
Yeah.
Because we still need the DM to wrap up, and we've still got some internal matters that have to be attended to.
Okay. Thanks for that, Chair. I think we'll appreciate that because it's a whole host of questions. It will take another 2 hours to go through them. We will definitely provide written responses in writing.
Okay, thank you very much for that, Mr. Mapula. Honorable DM, over to you.
Thank you very much, Chair. I did wish to initially warn that the problem with the ECS is that it's very technical. So sometimes it sort of kind of drags when they have to explain the stuff. The few things I will say is that the ECIC does have a board, and the board is appointed by the minister in a similar manner as the other entities such as the IDC and so on. It was not covered in the report, but when they do reply, they will give you, in the written reply, they will give you the board members. When we came to present our plan to fill vacancies, we included the ECIC board as well, where there were vacancies. Overall, Chair, I think that my sense is, as raised by members, there's a lot of visibility improvement that can be achieved, and we've already raised it with the ECIC and the other entities in the department that we are going to have to improve our communications and brand awareness campaigns, just so that South Africa across the provinces can broadly have a sense of the capabilities and facilities that exist in South Africa to support businesses. And the point about the ECIC's work being concentrated in Gauteng and Western Cape, one member asked, it has to do with the fact that they mostly work with fund managers, and fund managers are mostly concentrated in Johannesburg and in the Western Cape. So that is what creates that concentration bias. You don't have fund management firms that are operating from Durban, East London, Port Elizabeth, Nelspruit, and it's the nature of the South African financial market that sort of creates that. But the key issue is we want to have a lot of exporters from different provinces, from different regions, whose export is covered by the ECIC. That's the kind of work that we are getting into with them. So a special distribution of companies that are assisted by the ECIC in getting their products into markets in Africa. It's very central to the work that we're doing. Without further ado, Chair, I am going to stop there and do say that we're quite committed to come back to the Select Committee whenever we are requested to. And we are always happy to share information with you. Thank you very much.
Thank you very much, Honorable DM. As you said, it is very technical of nature. My eyes have opened. I wasn't quite sure what it was about, but doing a bit of research, I was able to get a better understanding, but the presentation also provided a bigger insight for me. Colleagues, while we get the department, if they will, ECIC and the contingents to leave. Maria, may I ask that you please flight the minutes that need to be approved? Thank you.
We'll do so, Chair.
Colleagues, while we're waiting for that, the minutes were sent out to you. So I take it that they have been read. So what I need from you is somebody to move for the adoption of the minutes and to second them.
Chair, can everybody see my screen, Chair?
No, unfortunately, we only see snow and rocks.
No. Okay. There we go. Okay.
There we are. Colleagues, as I said, these are the minutes for 18 February. And with regard to the foodborne illnesses, I don't know if you want us to go through page by page, or could I just ask for a mover and a seconder, please?
Chair, it's Van den Berg.
Yes, Honourable Van den Berg.
I've gone through the minutes. They seem to be pretty accurate. I will move.
Thank you very much for that. A seconder, please. Honourable Mabilo, Honourable Dlamini, Honourable Kennedy.
Chair is Honorable Kennedy. I second the move.
Thank you very much for that, Honourable Kennedy. Are there any matters arising from the minutes that anybody would like clarity on? In the absence of any report on that, I then declare the meeting as adjourned. And thank you to everybody involved. Have a great afternoon.
Thank you, Chair.
Thank you. Bye-bye.
Thanks, Chair.
Thank you, Chair.
Bye.
Recording stopped.
We move on to